Okay, the numbers that you see on the bars, okay, they represent retail traders. Okay, if the numbers are in white, that means retail longs are in that bar. Okay, if the number is yellow, okay, retail shorts are in the bar. Okay, now price can't go down until it gets below the retail longs, and price can't go up until it goes above the retail shorts. Now let's look and see if what I'm saying is true. Okay, we've got the retail longs. Price goes below the retail longs, and boom. Okay, now the actual numbers you see themselves, they represent how many retail traders are in the bar as far as a multiple. For instance, there are 19 times more buyers in this bar, okay, um, than sellers, right? There's 9 times more sellers in this bar than buyers, okay? So, and we can get into that later about how that relates. We can use that for target projection and things like that. Okay, but just look here. Okay, so we've got retail shorts here. Market can't go up until it gets above them. And when I say really get above them, I mean a close above the high of the bar. Okay, not just a break. Right? Um, we got here. We've got the retail longs. Okay, go below them. Okay, and you see we've got retail shorts coming in here, and price can't go up until we get above them. Okay, goes down, price doesn't get above them. Okay, we go down, get more retail shorts. Okay, when price gets above here, close on this bar, we go up. So now we have retail longs, right? So price is not going to go down until we get below a close below the retail longs, right? So we don't get a close below the retail longs. Here we get a close below the retail longs. Okay, uh, but as you see, it's a down bar. So right now I'm just going to cover the basics with you. Okay, but still, uh, these are the retail longs here. Okay, when price gets above them, below there, okay, we can expect a down move. Right, retail longs, longs, longs. Okay, here, boom, we get a close below the retail longs. But see here, when it goes like this, for instance, these retail longs and it closed below them, okay, and it didn't go much further down, okay, just one bar. But when we get this close here, it's below all of these retail traders in the swing here, and what that tells us is to expect a major move, okay, like we have. So here we got retail shorts, can't go up until we get above them on a close. Retail short, no close, okay. Retail longs, here we go, below the retail longs, we continue down, okay. Can't go up until we get above the retail shorts here. We do on this bar, okay, and we go up. Coming up, looking for a close below some retail longs here in order to tell us we want to go down. Here we get a close below retail longs. Okay, now these are inside bars to this bar. This is mother. When I say inside bar, I mean no bars closed above the high or the low of this bar. So this is the retail bar. In the when we have inside bars, we look to mother. Okay, so if we get a close below mother here, okay, then we look for price to go down. We get a close below mother here, we go down. Okay, here we get a close above the shorts here. Okay, let's see, and then we stop here. Okay, but it didn't go much further. Okay, we turn back down, and the ones that don't happen, they are related to trend. Okay, we're not talking about trend right now, but when we talk about projections as far as where price will go once it gets above or below the retail traders, then we get into other things such as trend, okay, and volume, okay, as far as volume acceleration or deceleration, okay, and so there are things to consider besides this, but 75-80% of the time this is going to work just by itself, okay. um, So here we've got retail longs in the market here. We're going up, right? So we know we can't go down until we get below the retail shorts here, right? And so how can we use that? Okay, well, if you're long, you know your stop needs to be below the retail shorts. Okay, if you're long, when you get a close below the retail bar, okay, then you know it's time to get out, right? If you're short, you know when price gets above the high of a retail shorts, then price is going to go up. Okay, but this is the 4-hour Australian dollar, US dollar, and it works the same on every time frame, in every chart, in every market. Let's look at everybody's favorite euro dollar. Okay, so here, see how, for example, now on this part, I want to talk about how this relates to trend. Okay, we can see that the trend is down. If we look back, we can see, okay, the trend is down. We don't need a moving average to tell us that the trend is down. Price action alone tells us that. Okay, and but this is not my lesson on how to teach trend. All right, now let's look at, uh, for instance, price got above the retail shorts here. Okay, that bar only has about probably about the real body. Okay, we're looking at the real body. Okay, from the open to the close. Okay, that's about 3 pips. Okay, 3 times 2 is 6. So we would expect price to go at least 6 pips above this bar, which happened. This it did fulfill that. Okay, but there are other aspects we get into also when we talk about uh, swing resistance and swing support below. But we're talking single bars now, right? So now I said the trend was down, right? When the trend is down, guess what? Okay, the market is waiting for retail longs to enter. For instance, when the trend is down, you get a counter trend move to the upside. Once the retail traders enter the market against the trend, okay, they're toast, okay. We get a close below this bar, price will continue down, okay. And let's see, retail shorts enter here. Look what happens against the trend. Okay, right now we're just looking for retail shorts entering against the trend. Okay, here. Okay, against the trend, down. Okay, now here against the trend, right? Well, it's a consolidation now. Now, okay, we get up and we look at this bar. The minor trend has changed to up. How do I know that? Because it closed with a new high. Okay, so now these retail longs, they are not necessarily against the trend, but still, if we get a close below there, okay, we would expect price to move down. Okay, um, let's look at something. Let's look at I don't know, pound yen, I guess. Okay, okay, it's trying to freeze up on me here. Oh, there we go. Okay, just look at the pound yen, and it works the same on the daily, 1 hour, whatever time frame you're trading. This is the way we look at it. Okay, so here, price gets above the retail shorts. Okay, we would consider price to start moving up from here because that's what changes the momentum. Okay, and so once that happens, okay, when retail traders enter here along here, we know that if we say, okay, we know this is a momentum signal here, okay, when price got above the retail shorts, they're long, right? Okay, so now we know that at first, okay, here we've got retail shorts here now. So, and but this is an inside bar. So see, this is a mother. So this counts, but this is where we need to get above, right? So now we've got retail longs coming in. So as soon as retail longs start coming into the market, okay, then your stop goes below the low of the retail bar. Now these two bars here, they're inside bars to this bar, right? So, and this is the key bar we'd be looking at, right? So as long as we're going up, okay, and we get the retail traders. Okay, so now here we go. Retail traders. Okay, close below them, we expect to go down. Right. We've got some retail shorts here. Can't go up until we close above them. Get a close here. Retail shorts. We get a close above right here, and here we go. Okay. No stop outs. No close below the retail traders. Okay. So now that I'm not just saying it, I'm proving it and showing it, we can now make this deduction. Okay. The cause for market moves is not traders entering the market. The cause for market moves are traders exiting the market. So, short sellers cause price to rise. Okay. Long buyers cause price to fall. This is Jerry, forextradingmagic.com. Peace and one love.